that deal when Scott Bessent went to Kyiv last week.
What do you make of kind of just how this all looks? Like I think about the meeting with Saudi Arabia, and now a meeting with the French president, and then the UK Prime Minister is later this week, and conversations with Vladimir Putin and those with Zelensky. Is Donald Trump the ultimate deal maker, Joe, or is he looking to make deals with each to get something for the United States and then ultimately come to some kind of conclusion or assist when it comes to putting an end to the war between U.S. and, not U.S., excuse me, Ukraine and Russia?
Yeah, I don't know if you mean some sort of grand bargain that involves all of these countries. But
or
yeah,
separate
he's
bargains with
looking
each, or separate deals with each.
That may well be the case. I think he would love to see that happen. I will remind everybody that you do see a lot of interactions with foreign leaders when a new president comes into office. And one thing that I've had trouble not thinking about today is, remember, Joe Biden's first state visit, the first foreign leader who came here, and they pulled out all the stops, the big welcome ceremony, they had the bands on the lawn, they had an actual state dinner. That was for Emmanuel Macron. The way it went down today is he walked into the White House West Wing entrance as if he was anybody who had an appointment in the Oval Office. There was no fanfare. There is no state dinner tonight. And the difference in these relationships and the way Donald Trump is approaching them is fascinating to me. I'll be deeply curious to see what the reception is for Keir Starmer on Thursday.
Joe, is that because, was the difference in the way they were received, is that a choice that the president would make? Is it symbolic of the relationship between the U.S. and France under President Trump versus President Biden?
It sure seems like it. I mean, yes, the president does make that decision, whether it's a working visit or it's going to be a full-fledged state visit with a state dinner. That's like, all the trappings. That's the big one. That's the big embrace that you give to a world leader. And Joe Biden was quick to tap France for that honor. This is a very different look for this visit. The Modi visit was pretty different a couple of weeks ago as well, as we have kind of an informal. He called him Emmanuel at the beginning of the news conference instead of President Macron.
At the end, he said, "Dear Donald." President Macron said, "Dear Donald," although that was the translation.
Or maybe that was his intent.
Yeah, he said that in English as well at one point.
Okay.
And, we remember when they met back in 2017, the handshaking, and each one's trying to power shake the other, and then it's a tap, and the other one tap. And they can't let go of each other because somebody wants to have the upper hand. That's the nature.
That's how it is when Joe comes to New York, and we get to see each other in person.
Yeah, you guys do like that backslapping things. But Joe, having said that, trying to read the tea leaves of something that is so crucial. Here we are marking the 3rd anniversary of the start of the Russia-Ukraine war, now going into its 4th year. Is there something to read in terms of a takeaway about the seriousness that we are truly moving closer to an end of this war, and one where everybody has a seat at the table, including Ukraine?
Well, the second part of your question, I don't know. The administration has suggested that, yes, Ukraine will eventually get a seat at the table, but they need to work some kind of a framework first. And I think the first goal is to get Donald Trump in a room with Vladimir Putin, or at least in a meeting with Putin, some sort of summit that they've talked about in the weeks ahead that would then unlock fuller talks, presumably to include Europe and specifically Ukraine. We don't have a sense of that, though. And Donald Trump put on Truth Social today that he is getting ever closer to a deal. I have it here in front of me because it was interesting. He said, "I am in serious discussions with Vladimir Putin concerning the ending of the war." Are they talking a lot and we don't know about it? Mike Walls, Steve Witkoff, rather, his Middle East envoy, revealed on CBS yesterday morning he had a 3.5-hour-long meeting with Vladimir Putin, and no other U.S. officials were in the room.
Or European officials.
That being a very different approach than a typical White House. It just makes us wonder what they're talking about right now.
Yeah. It's interesting, right? All the different pieces and what it ultimately means. Joe, looking forward to you guys coming back at 5 o'clock and continuing this story. Of course, one of the co-hosts of Balance of Power here on Bloomberg. That is Joe Matthew out there in our D.C. bureau.
Well, Joe, just giving us some updates on what happened between President Trump and President Macron. Some other headlines. President Trump, as Carol mentioned, saying that the purpose of the meeting today was to end the Russia-Ukraine war. Trump also saying the U.S. deserves to recoup the money that we've spent or that we've sent to Ukraine. For more on this, we're joined once again by Monica Bishko-Kaite. She's Public Policy Director at the Strategic Political Consultancy Key Elements Group. She joins us once again from London. Monica, separately, we should note Ukraine is in the final stages of talks with the U.S. over this deal to give Washington a cut of the country's natural resources. We got this from Ukraine's Deputy Prime Minister. You argue that Ukraine must make the U.S. a strong partner. Is natural resources the way to do this?
I think that for Ukraine, what's very important is to become a strategic place and location that U.S. would have vested interest in. And to do that, you have to have economic relations and economic importance. And I think that based on what President Trump is saying, he would be happy with this deal. And I think that if you have American business deeply rooted in Ukraine, even if you don't have a written guarantee to say that the U.S. would help Ukraine in case of Russian attack, continued attacks in the future, I think if American business is there, it is in the U.S. interest then to defend Ukraine because American interests would be directly affected by this. So I think as much of economic interest you can have in Ukraine for the U.S. and for Trump administration, the better the relationship can be in the future when we need security guarantees from the U.S. in Ukraine.
What are the optics of all of this, the different meetings? We mentioned the meeting with Stephen Witkoff and nobody else maybe necessarily being in the room. There's just so much going on. How do you read the optics of what this means in terms of an actual end to the war between Russia and Ukraine and what it means for Ukraine going forward, what it means for Russia and its place in kind of the global world order? Both of them, really.
Yeah, so I think that talking to people in Ukraine who are close to the situation, we don't think that the deal is imminent. I think that it is in the air and conditions are being discussed. However, I don't think that without talking to Zelensky and having more discussions with Ukraine, a deal can be implemented. At the same time, it is quite shocking to see how Russia came back to the diplomatic table, to the world table, and is being able to talk directly to the President of the United States. I think that is definitely concerning. And domestically for Putin, that will be empowering and will be seen as strength and potential victory for many years. And that is definitely, on Russia's side, not on Ukrainian side at the moment.
Monica, what do you see as Zelensky's future in the country? Do you think he'll flee the country?
Yeah. I don't think he will flee the country. I think he had a chance, he was offered a helicopter at the beginning of the war, and he said, no, I would like to stay and continue fighting. So I don't think that he's a quitter who would leave the country. But I think that looking from historical perspective, we saw that leaders who led the countries during the wars weren't really popular after the war, simply because that, people have short-lived memory and they remember kind of the end of the war, how it ended, seeing the devastation, the economic struggle. I think that people will think about that. So it will be quite hard for Zelensky to be re-elected, and we do think that, talking again to the sources in Ukraine, I think that election is upcoming and it will be the most difficult one for Zelensky so far.
Yeah, it's been difficult, no doubt about it. We talked with our Mark Champion, who covers Europe, Russia, and the Middle East. He's a Bloomberg opinion columnist, and this was last week. And he said maybe the way to really think about this is that it's not necessarily the U.S. trying to negotiate an end to this war, but rather negotiating a reset with Russia, with Ukraine being a valuable card to trade in that process. Do you see it at all that way?
So I personally don't think that U.S. would, become great again by empowering Russia. I don't see a reason for U.S. to reset with Russia or empower Russia, because even if we look economically, Russia is not a market where U.S. companies that care about their future and investment would like to be back, because Russia is a very difficult market. It's not a free and fair market. It's controlled by oligarchs and people close to Putin. So there's no economic benefit from that. There's no political benefit from empowering Russia and making it a superpower. So I think that such idea would not work in reality. There's no need to do that, and you won't make America great again by making Russia great again.
How would you characterize the difference between the U.S. approach right now under Donald Trump and the way the European bloc, the European Union, is approaching the situation?
So I think, for Europeans, this directly affects their own security because obviously Ukraine is in Europe, and if Russia perceives victory in Ukraine, they could go further. Whereas for the US, I think they're quite offended by the fact that European financial support was given to Ukraine as loans, whereas the American support was given as aid without asking to pay back in the future. And now President Trump is thinking that this perhaps wasn't fair, especially that Ukrainians don't seem to acknowledge that enough. So I think he has quite a different perspective. He says that he likes to make deals, and he sees that a deal for US right now is not the best deal, whereas Europeans perhaps are getting more acknowledgement and, as he would put it, a better deal with Ukraine. So I think it's just different perspectives, but one side is also affected more. But at the same time, the US would like to see Europe contributing more to their own capabilities, their support for Ukraine and their defense, because US cannot keep carrying the burden without Europe also stepping up to the plate and making sure that they're capable of doing it themselves as well.
So, Monica, I try to ask everybody who comes on our program to talk about this war. It's the third anniversary of it. It's now going into its fourth year. I remember 3 years ago, we were sitting here, and there were many analysts on our air talking about how this would be over in a matter of days just because of Russia's sheer size versus Ukraine's. How, in your view, does this war end and when?
So I think we're nearing the end of the war. However, we have to acknowledge that Ukrainians did a tremendous job, both in their military. As you said, Russia is bigger in size. It's a better funded military because, of course, they're spending so much more of their budget for defense. So Ukrainians did an amazing job in defending themselves. However, at the moment, they are able perhaps to make sure that Russia doesn't advance, but there's no substantial victories in the battlefield. And without continuous support from the US, from United Front, from Europe and UK, I don't think that Ukraine, unfortunately, can continue without this united support that it has had throughout the 3 years. And I think at the beginning of the war, President Zelensky did an enormous job of, rallying the world around Ukraine and making sure that Ukraine is supported. However, right now we see a bit of different situation, whereas the U.S. administration is no longer willing to go for many more years in the support, and they would like to see the end to this war and stopping of killing of Ukrainian people in Ukraine.
Hey, Monica, so if you did say you didn't think any deal is imminent, but what would be the most logical timetable in your view for this war coming to an end finally?
I think it's coming soon. However, for it to come, again, there needs to be conversations that include Ukraine and Europe as well, because without Ukraine, of course, any deal cannot be made, and we need to have a reasonable deal, whereas Ukraine doesn't come out of this war without having anything that it was fighting for. We need to talk about potential EU membership. We need to talk about security guarantees, and I think this unfortunately takes time. We cannot just do it in 24 hours, as President Trump originally imagined. I think it will take a bit longer. However, I think this year, as President Zelensky also said, he would envision we'll see the end, and I think early this year rather than late this year, we'll see the end of the war.
Hey, Monica, we'd be remiss if we didn't ask you about the election in Germany over the weekend. To remind everyone, the conservative leader, Friedrich Merz, emerged as the winner in the election. The results, though, gave his bloc just one clear path to power with intense pressure to move quickly to form a government. I think a big part of the story is the far-right AfD, Alternative for Germany, doubling support to become the second strongest party. They had 20.8% in the election. What were your takeaways after the votes were tallied?
So I think that in Germany we'll see a more decisive government. I think that Merz as chancellor will be taking stronger action than perhaps the previous government did take. He is pushing for Europeans to, build up their defense, same as President Macron. So I think there is also an angle for potential German and French cooperation in near future, especially now that the US has been saying that Europe has to take a stronger role. I think this is very likely to happen, given what Merz has been signaling. Of course, this was him talking in election cycle. We need to see what he will say after now that he has been elected, when he builds the coalition. And regarding the right-wing party, yes, we do see that in Europe and in the US as well, there is a rise of lenience towards these types of parties. And this has been caused by different aspects regarding, for example, security as well, immigration. And we have seen increased support for parties like these in Europe. And I think it is likely to continue to increase in the future.
All right, going to leave it there. Monica, thank you so much. Really appreciate it. Monica Bishko-Kaketi, she is Public Policy Director at Key Elements Group, joining us from London.
Hey, let's get an update on these markets. About 10 minutes to go until the close of trading right here on this Monday. Here he is, Charlie Pellet.
Hi, thank you very much. And here's what's going on. We have got the Dow higher, the S&P, NASDAQ. They are both in the red right now. Right to the numbers, we got the S&P at 6,005. That is a drop of 8 points, down by about 0.1%. Dow Industrials up 144 points right now. The Dow gaining 0.3%, while the NASDAQ Composite Index is lower by 143 points as the selling continues, down now by 0.7%. Stocks are churning after a late week sell-off. Traders are gearing up for NVIDIA's earnings later in the week, along with key inflation data. We've got the 10-year yielding 4.39%, with a 2-year 4.17%. Gold up $14 the ounce, $29.50. Spot gold up 0.5%, and West Texas Intermediate crude up 0.7%, $70.89 a barrel. Coming up after the close of trading, Zoom Communications shares are lower for a fourth day, down by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
It's Bloomberg Business Week. That's Carol Masser. I'm Tim Stanovic. 9 minutes to go until the close of trading. We just got the numbers from Charlie Pellet. Down 0.3% on the S&P, down 0.9 on the NASDAQ Composite. Carol, after years of outperformance, the S&P 500 is trailing its international peers this year. Investors are put off by uncertainty from President Trump's policies on tariffs and immigration, as well as lofty valuations.
Yep, we've talked about it a lot. We'll see whether that outperformance continues. Let's get to it. Our Drive to the Close guest is Eric Metz. He's Chief Investment Officer of Spider Rock Advisors, joining us here in our Bloomberg Interactive Broker Studio. Good to have you here. What do you make of the market environment, and especially when we've talked about American exceptionalism, and yet you look outside the United States and there are some markets definitely outperforming the U.S.?
Completely. I think it's a little bit of a tale of a different story this year versus the last 2 years. I think uncertainty is beyond prevalent and observable. And I think investors' psychology is a little bit tepid, right? So you've had two massive equity performance here domestically. You guys just mentioned the international outperformance. Yes, there's some policy. Yes, there's some currency effects. But largely speaking, the U.S. markets have been so good to so many people for so recently long that a pause is probably also healthy.
What do you think of valuations right now? I think it was Mike Wilson from Morgan Stanley who was on Bloomberg Intelligence or Surveillance this morning, and Paul and Tom asked him about how expensive the U.S. market had become, and if clients are asking him, and he said, that ship sailed. They're not even asking anymore because things are so expensive right now.
Our work is solely focused on advising folks on the risks they see and sometimes the risks they may not be seeing. And valuation is often a concern of clients, investors, portfolio construction alike. But my rebuttal is valuation is not a catalyst. And so if you're trying to think about building portfolios, the timing, the macro levels, market timing, et cetera, are very, very challenging. Expensive can get more expensive. Valuations can get further extended. I think objectively speaking, on almost every metric, they're, on near historic all-time highs. So for that argument alone, yes, they're expensive. But I think the thing to consider is it can get more expensive if that's where investor sentiment takes us.
Yeah, absolutely, right? If you get some momentum going, right, and chasing. Having said that, the trade in terms of overseas and the outperformance we're seeing, is it a fundamental trade? Is it a valuation trade?
Well, listen, I think, without...
And we're lopping a lot together, and I'm looking at some of the developed markets.
Yeah.
But you know what I'm saying? Is it fundamentally based, or is it just a case they've been beaten down so much that why wouldn't you, on a valuation basis?
Our clients and our work for clients definitely has, I'll call it a diversification might finally pay off in equity holdings, right? So a little bit of a mean reversion. But I think the thing to think about here is there is a lot of policy affecting currency. affecting international trade, which could come into kind of an import-export. But again, at the end of the day, like all of this from where we sit is just providing investor uncertainty, and so that puts a little bit of pause in kind of portfolio construction and some of their aggressiveness.
What's the biggest obstacle as you look ahead this year? I mean, I mentioned the uncertainty around policies on tariffs and immigration. Is that the biggest uncertainty you see?
I think from where we are operating predominantly with our taxable clients base, the notion of how to lock in gains, the notion of how to rebalance portfolios with tax as a friction point has been a massive discussion point. And so, yes, there's this turning of the tide, domestic versus international. Yes, there's a growth versus value argument. Yes, there's valuations in scope always. But I think the repositioning Mag 7, but also just broad-based domestic equities is so cost prohibitive from a tax perspective that uncertainty is where our core work is founded a value proposition in a lot of these clients.
So what are you doing then?
We're, re-risking and de-risking using option overlays. That's the core thesis of how to solve that. It's the instrument that can solve that without selling the underlying instruments. And so whether it be Apple or NVIDIA or Google or Microsoft, those are the obvious outperformance. It's NASDAQ, it's growth. It's largely domestic versus international. So thinking about how to, I'll call it rebalance portfolios just more tax efficiently is a core thesis for us.
Which is what you guys do if you go to your website. That's how you mitigate risk.
Yep.
Whatever it may be.
Whatever it may be. Currencies, concentrated stock, factors, all of the above.
How do you mitigate risk without giving up returns?
Yeah, I think there's two lines of thinking here. One is...
Because you're paid to take risk.
People are paid to take risk. That is the definition of equity risk premium. Go back to valuations now where interest rates are. Interest rates are tugging at that equity risk premium, broadly speaking. And so when that rebalance wants to occur, whether it be equities to fixed income, whether it be putting cash to work, whether it be growth to value, thinking a little bit more creatively than conventional measures of just sell X to buy Y. Let's incorporate a derivatives overlay to do that more tax efficiently. Because there is no balance sheet funding. Like by definition, we sit on top of portfolios.
Eric, just got about 45 seconds left here. Are you finding in this environment that there's more risk mitigation than you have to do maybe in other market cycles? I'm just trying to get a gauge of the nervousness within the market.
The demand curve, I think, probably more so than ever, of which some we discussed as to why, right? You have competing forces, interest rates, fixed income providing real healthy returns.
Right.
At the expense of equity valuations, equity risk premium, right? That's one. I think the biggest thing is what everybody is aware of, but just we don't talk about it enough, is the demographic shift in taking the retirement asset base and downshifting risk. You can downshift risk by taking your 80-20 to a 60-40, but that's got a tax impediment. And so that work right there is where we really spend our time educating and advocating for our clients.
All right, makes sense, makes a lot of sense. Eric, thank you so much.
Thank you, guys.
Eric Metz, Chief Investment Officer of Spider Rock Advisors, joining us right here in our Bloomberg Interactive Broker studio. Folks, we're just about 2.5 minutes away from the close here on this Monday. We see stocks taking a leg down. We're getting near our worst levels of the session, so that's down about 1.2% on the NASDAQ 100, just about a 0.5% loss on the S&P 500. You are listening and watching Bloomberg Business Week.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you to that closing bell. A global simulcast. It starts now. Scarlett Fu in the TV studio, Carol Masser and Tim Stenovic in the radio booth. All five of us back together as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube here on Carol.
Yeah.
That was supposed to be a buy the dip day. What'd you do?
Yeah, I don't know. I guess they got the memo that didn't get the memo, and you are seeing some selling here into the close. So we may finish near or at our lows of the session. Having said that, you go into the S&P 500 kind of half are up and half are down, even a little bit more to the upside than to the downside.
Carol, have you seen your NASDAQ Golden Dragon China Index today?
I didn't. I know, not so great.
I saw it. Down 5.2%. There's this memo from the Trump administration to curb Chinese investment in U.S. tech, energy, and strategic sectors. That's sort of this chill across many of the companies based in China.
It's had quite a bounce, though.
Yeah, well, leading with Alibaba, right? That stock is down 10% as we head towards the close.
Would be a really good decliner.
The S&P 500, the 50-day moving average, and the 6,000 level are the ones that you need to be watching for. Now that we seem to have broken below that, it really comes down to the 100-day moving average. And I bring this all up because there's still so much uncertainty, so you end up looking at things like technicals.
Well, what's also so interesting, too, is this is the 36th session that we haven't had 1% consecutive declines, right? But we're now having 0.5%. Does that kind of count towards something? Does that inch us towards something else?
I don't know. I mean, I think to a certain extent, I think you're right. Although I think Carol makes a good point too. Is you're still looking at the majority of the stocks in the S&P higher, and this kind of gets to what I think Kara, as well as Jay Jacobs, some of our earlier guests on Bloomberg TV, were saying is that there is still a lot of buying. It's just not in those names with the largest weightings that are able to sort of move this market. And that's a big part of the reason why you're looking at a lot of red on your screen. The S&P 500, which opened higher and then spent a considerable amount of time in the red and then a considerable amount of time in the green. It's going to close out the day lower by almost 30 points or about 0.5%. The NASDAQ composite is down more than 200 points or about 1.2%. Similar declines for the NASDAQ 100. The Dow, that's your bright spot here, but only higher by about 1/10 of a percentage point. And if you take a look at the small caps, the Russell 2000 looks like it's going to finish the day lower by 17 points or 0.8%.
All right, I'm kind of flying high since Romain called me out in a good way, so I'm just going to go back there. S&P 500, 284 names to the upside, and you got 219, Scarlett, to the downside.
We all live for those shout-outs from Romain.
We do.
Let's take a look at the IMAP here. You've got 11 sectors, and 5 of them are in the green, 6 of them are in the red, so pretty evenly split. Your worst performers are tech-related, so infotech, consumer discretionary, and communication services. The best performers tend to be some of those more defensive sectors: healthcare, real estate investment trusts, and financials.
And Nike sneakers. They are one of my gainers in today's session. They're up 5% here, so just finishing off their highs. Jeffrey's upgrading the stock to buy from hold, saying the company is being positioned for a strong recovery over the next couple of years. The analyst there saying it was his new top pick, lifting the stock price target to 115 from 75, so quite some upside from here. And this was your number 2 gainer in the S&P 500. Berkshire Hathaway, guys, a gainer as well, up 4% on heavier volume today. Company reported over the weekend that operating earnings surged 71% in the fourth quarter, driven by higher interest rates and a strong recovery in its insurance underwriting business. And then you have Bridge Investment Group up about 34%. Apollo Global Management buying the company.
I just want to say the Berkshire thing. I was so amused by how people were characterizing that cash hoard that they have, which is now over $300 billion. And some people were saying, "Oh, that's a great thing." Other people saying Buffett's out of ideas. I don't know.
Haven't we been saying that for years? The whole too much cash, out of ideas, nothing to buy.
Always there, right?
Yeah.
Yeah.
It'd be nice to have that kind of cash.
Or maybe he thinks things are overvalued.
Think of that high-yield savings account that would happen.
Yeah.
Would you rather him spend it on a bad idea? Probably not. Right?
No, I just like some of that cash.
Yeah, me too. Yeah, spread it around, Warren.
Yeah. Let's.
Does Tim have something to say? Oh, sorry.
He's paying taxes. That's what he's doing with all that money,
Tim says
right?
all he needs is $10 million. Isn't that what you said?
Yeah, that's it. It's not a big ask. Look at shares of Palantir today, down yet again, 10.5% decline today. It's the biggest 4-day drop going back to 2022. This all follows news last week that Defense Secretary Pete Hegseth has projected U.S. military spending to be cut by 8% over the next 5 years. It potentially jeopardizes this key source of revenue for Palantir. It is down 27% from that all-time high back on February 18th, so just last week. According to Bloomberg Intelligence, more than 40% of Palantir's revenue in 2024 was U.S. government related. Certainly one to keep an eye on, as it's lost more than a quarter of its value in just 4 trading sessions. And we did see shares in power and electrical equipment companies fall today. Constellation Energy, among the biggest decliners on a percentage basis after Palantir in the S&P 500 day, down about 6%. This after TD Cowen noted that Microsoft had begun canceling leases for a substantial amount of data center capacity in the U.S. This coming from TD Cowen. We should note that Microsoft has voided leases in the U.S. totaling, quote, a couple of hundred megawatts of capacity. It's the equivalent of roughly 2 data centers. TD Cowen wrote a note on Friday citing channel checks or inquiries with supply chain providers. And then Scarlett giving a little bit of preview for my final decliner. Alibaba ADR is falling by 10.2% today. Biggest fall going back to October of 2022. President Trump's latest executive order deepened investor concern over the economic showdown between the U.S. and China. It has to do with CFIUS. Trump directed CFIUS to limit Chinese spending on tech and other strategic U.S. sectors.
All right, guys, I'm taking a look at the bond market. You saw buying pretty much across the curve. The 2-year yield was down by about 2 to 3 basis points. And I say that because we had a 2-year auction that basically you saw mostly indirect bidders show up. Domestic demand really feel like they just did not show up. Tomorrow we get $70 billion in 5-year, and then you get $44 billion in 7-year. So more to come on the bond front.
All right, guys, we've got a New York City focus here for some of the stories that have caught our attention. This one has to do with billionaire Ken Griffin. You know him well, right? We talk about him. He's moved his company down to Florida, but he's actually been adding to his New York real estate holdings, and this one in an iconic building that used to be home to Vera Wang or Jackie Onassis. We're talking about 740 Park.
Yeah, you might have heard that Julia Koch, the widow of the billionaire industrialist David Koch, sold a unit at the building for $45 million. The guy behind it, Ken Griffin, that's according to people familiar with the situation, cited by the Wall Street Journal. The Kochs paid about $17 million for this pre-war unit back in 2004. Property records.
This got my attention because it's not in Florida. It's not in Palm Beach.
I know. I noticed that.
No.
He's got a huge presence here in New York City.
Likes real estate here, yeah.
We are getting some earnings. Sorry to break it up here, but we are getting some earnings. It's not a Hims and Hers, of course. This is the telehealth company. It looks like a beat on some of the key metrics here, with orders in the most recent quarter up to about 2.8 million. Actually, the street was looking for about 2.9 million, but revenue did come in higher than street estimates at 481 million versus street estimates of 475. And here's your forecast, with the company saying that it sees full-year revenue in the range of 2.3 to 2.4 billion. The lower end of that range is well above the average of street estimates for roughly about 2.1 billion. Of course, remember, there was a lot of concerns about whether this company would be hurt by some of the changes over at the FDA regarding the shortage designation for those GLP-1 drugs, which of course have been a boon to this company going forward. The shares, though, down about 8% here in the after-hours trade.
Also taking a look here at Chegg, it is an online educational platform, right? And it looks like they actually did beat earnings estimates. In the press release, though, they say they're launching a strategic review process, plus they filed a complaint against Google, which has unjustly retained traffic that has historically come to Chegg, impacting their revenue, employees, and acquisitions. So that's an interesting development there. That's not pretty much flat.
All right, guys, let's get to Zoom Communications, which is flat here in 2025, but we're seeing some movement in the aftermarket, seeing it down about 1.4%. The company talking about first quarter revenues. Let's go to the outlook. Sees first quarter revenue 1.16 billion to 1.17 billion. That could be a little light. The street is 1.17 billion. Sees 2026 operating income of 1.85 billion to 1.86 billion. Again, the street estimate's about pretty much there, 1.85 billion. And just going back to the fourth quarter revenue, 1.18 billion. That's spot on. And fourth quarter adjusted EPS, $1.41, and that's 10 cents better than what the street was expecting. But again, we're seeing maybe some disappointment, some concern potentially about the outlook there. Stock just down about 1.4% after market.
All right, just want to go back to Hims for a moment. We saw the stock moving down in after-hours trading, and one reason could be because gross margin was 77% in the quarter. Analysts were looking somewhere north of 78%. So the stock currently extending its losses down to 11% right now. Also, you have net orders coming in below analyst estimates, 2.81 million. Analysts were looking for 2.9 million.
All right, Scarlett, Hims and Hers down about 12% here in the aftermarket, so taking quite a beating. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Alex, I know you're heading out. Scarlett's hanging around with Romaine. Continue on television. Tim and I continue on Business Week right here on Bloomberg Radio. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, I do want to draw your attention once again. Hims and Hers is something we talked about with our own
Madison Muller
guru when it comes to GLP-1 drugs. Madison Muller, you're
this
seeing...
was one of my big decliners on Friday, Carol.
Yeah, and it's down another 12% here in the aftermarket, and it has to do with after it reported fourth quarter results, but also some disappointment perhaps about the outlook going forward. But it sees 2024 5 revenue. So this year, 2.3 billion to 2.4. Street was looking for 2.09 billion. So that actually is better than what the Street was forecasting. First quarter adjusted EBITDA, 55 to 65 million. The Street was looking for 56.9 million. We heard Scarlett talking about watching some of the margins. So 2025 sales outlook beat despite some of the uncertainty. So maybe just still some continuation of what we got on Friday.
Okay, you're looking at hims and hers. I'm looking at the $162 million market cap company Chegg. The company announcing that it's beginning a strategic review process. This company has been beat up over the last few years, Carol. It's now, I said, $162 million in market cap.
Yeah.
This company had a high of a market cap in the last 5 years, back in February of 2021 at $15 billion. The company did report earnings, adjusted EPS, that did beat the average analyst estimate at 17 cents per share. That was the adjusted EPS for the fourth quarter. The fourth quarter net revenue coming in at $143.5 million. Estimates are for $142 million. The company also announced a complaint filing when it comes to Google and Alphabet. Google's Alphabet, rather.
Yeah, stock down 7.7% here in the aftermarket. We should point out, going into this, about 10% of the float was short. So, yeah, the sentiment certainly on this one has not been great. Zoom Communications, we're seeing this one also some movement in the aftermarket, just now down about 4.5% here. And you do see they're coming out with fourth quarter enterprise customers, 192,600. The estimate was for 193,641. So slight miss there. But again, to the outlook for this company, sees first quarter revenue 1.16 billion to 1.17 billion, little bit light potentially. The estimate is for 1.17 billion, and sees 2026 operating income of 1.85 to 1.86 billion. And Tim, the street estimate is 1.85 billion. So could be the EPS number. First quarter adjusted EPS, it sees $1.29 to $1.31. Street estimate is at $1.31. So maybe just some concerns over those slight misses.
We're still waiting on some other companies to cross in terms of results this afternoon. We're waiting Cleveland Cliffs. In addition, Topgolf Callaway as well. Some other headlines from Chegg. The company's retained Goldman in connection with a strategic review.
Yeah, this is, again, a continuation of some of the earnings as we get to the tail end of earnings season.
Which
Keep in
means
mind,
one thing.
NVIDIA is coming your way on Wednesday.
That's exactly right.
And that's a big one, right? We'll see what it says about certainly the AI trade that we have seen for now 2 years and running. NVIDIA, I should say, finished down about 3% in today's regular session. But we did see pressure on a lot of the Mag 7 companies.
Wow.
So, yeah.
Did you talk about NVIDIA today? I was
Yeah.
just doing some searching around.
Down about 3%.
Yeah. Tesla and Meta, too, fell, at least earlier in the session. Apple shares did move after the company said that it will hire 20,000 new workers to produce AI servers here in the U.S.
Yeah. And we did also see, I should point out, that in the last few minutes of trading, we did see investors put some pressure on the equity trade. So we did see kind of a leg down in those last few minutes of trading, which resulted in the NASDAQ 100 being down about 1.2% and the S&P down about 0.5%. And that was after we saw selling on Friday. And I think we thought there was going to be expectation coming into this market. Keep in mind, the S&P was down about 1.7% on Friday. I think there was expectation that you would see a bit more dip buying, but not necessarily playing out. Although half the names in the S&P 500 were up, half were down.
I will say we did see a leg lower for the S&P later in the session. Carol, you mentioned down 1.7% on Friday. It was down as much as 0.6% today, but still finished lower by 0.5 percentage point. So there were some moments of the day where it was in the green.
Yeah. Listen, there's a few things coming our way. We talked about NVIDIA earnings. We're going to get the Fed's preferred reading on inflation. That comes later in the week, so we'll see what that has to say and any indication it might reveal in terms of the Fed's fight against inflation and what it might mean in terms of what they do with rates. Do they continue to hold off? You know, we've had guests, some who say maybe the next move is actually an increase. The market would like to see probably a decrease, as long as that means U.S. growth continues. We don't want to see necessarily a slowdown in U.S. growth. So there's a lot coming at investors.
Our Markets Live blog earlier today had a nice post from Heather Burke. It's about 10 in the morning that NVIDIA may not be enough to spark a mega tech turnaround. She wrote that even a blockbuster earnings report from NVIDIA may not be enough to help mega mega tech close the gap with the rest of the S&P 500. She noted, this is earlier in the session too, the Mag 7 has fallen about 3% this year compared to about a 2% gain for the S&P. It hasn't hit a record high since December. Traders' concerns include price evaluations and increased capex spending, especially on AI. Overall tech mega caps contribution to returns has started to wane, and investors are also looking outside the U.S. for returns. Hedge funds' net exposure to Mag 7 names, that keeps declining.
Huh, interesting, right?
Yeah.
Well, if I look at the Bloomberg Magnificent 7, Mag 7, total return index down another 1.4% in today's session. That's on top of a 2.5% decline that we got on Friday. And if I just dig into it, you had 6 of the Mag 7 down. The only one, don't cheat, that actually gained in today's session. We talked about it.
Apple.
Yeah.
Yeah.
Up about 0.6%.
Okay.
Yeah.
Everybody should check out what Mark Gurman wrote about Apple earlier today. He was supposed to join us.
Yeah, he was.
He's here in New York City, which we love.
Yes, we do.
Early this morning, I woke up to this story. Apple, he was going to join us, by the way, but we heard from the president and Emmanuel Macron, the president of France, so we weren't able to take him.
Hopefully we'll get him.
Hopefully we'll get him tomorrow. The company did say today that it plans to spend $500 billion domestically over the next 4 years. It'll include work on a new server manufacturing facility in Houston, a supplier academy in Michigan, and additional spending with its existing suppliers in the country.
Yeah, and I want to go back to, if you missed it, you should ultimately, you should really check out our conversation with Mark on Friday.
Yeah.
Because part of what we were trying to get a good feel of, and this was after President Trump and Tim Cook, of course, the CEO of Apple, had a meeting when there were things coming out of President Trump, be it his social media platform, about what might come. And there was something about plants in Mexico that weren't going to happen for Apple, and they were going to happen in the United States. And Mark was very clear about the global supply chain. First of all, the manufacturing that goes on, ultimately, the final assembly that happens in China, that's going to continue for a long time. It doesn't mean that Apple doesn't continue to build out its global supply chain, to help in the different markets that it is, or provide some redundancy. But in terms of its exposure to the U.S., he basically said there were no plants in Mexico.
Well, to that point, Carol, and to that $500 billion announcement over the next 4 years, Apple said that back in 2021, it would invest $430 billion locally over the next half decade. Mark notes it means that the latest development is a slight acceleration of its prior investments in previously announced plans. It adds $39 billion in spend and an additional 1,000 jobs annually.
Right, exactly. So the plans were there, no matter who was going to be probably in the White House, but they maybe added a little bit to it in terms of what they're doing.
What I want to know is what happens to tariffs, because Trump has threatened an additional 10% tax on items imported from China, where Apple builds the vast majority of iPhones and other products, but he's traded investment in the U.S. for relief in the past.
It's safe to say, and I'm not saying anything out of turn here, but you have seen a lot of CEOs. It's not abnormal to find their way either to the White House to meet with the president, and in this case, either at the White House or at Mar-a-Lago. In January, we know Tim Cook was one of several U.S. technology company CEOs to attend President Trump's inauguration in Washington. Tim Cook also met with the president at his Mar-a-Lago club in Palm Beach, Florida, after his election victory in November. There are a lot of issues that certainly impact these global companies, and they are meeting with the president. And so we will see. We should also say that Apple, I forgot about this, along with Foxconn Technology, will later this year begin producing the servers that power the cloud component of Apple Intelligence, a system called private cloud computing that will be happening in Houston. So that marks a relocation, at least for some production, from overseas. Next year, it says a 250,000 square foot facility for such manufacturing will open in that city.
Okay.
So there's stuff going on. Anyway, check out Mark Gurman and all the reporting on Apple and all of the big tech companies. I'm Carol Massar along with Tim Stanovic, and this is Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Keeping an eye on Hims and Hers health shares after ours, the stock now plunging by about 15%. It provided 2025 sales guidance that exceeded Wall Street projections, even as the company's copycat weight loss drug business faces an unclear future. And Zoom Video Communications, now known as Zoom Communications, projected worse than expected revenue growth for the year, dimming optimism that an expanded suite of products will bring a sales surge. After ours, we got Zoom down now by about 2.6%. A slide in most mega caps hit stocks in the final stretch of trading today as Wall Street gears up for a pulse check from NVIDIA on Wednesday. Today, we had the Dow Jones Industrial Average holding on to a 33-point gain, up by about 0.1%. The S&P was down 29, down 0.5%. NASDAQ was down 237, a decline of 1.2%. 10-year at 4.39%, the 2-year 4.17%. Gold up $15 the ounce, $29.51, up 0.5%. And West Texas Intermediate crude 70.85 a barrel, up by 0.6%. Again, recapping, the S&P down 29 today, a drop of 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Time now for the Business Week Women in Leadership segment, brought to you by Visa and Visa Foundation, connecting small businesses to the digital economy. Today, and especially International Women's Day, they are committed to uplifting small businesses for growth.
Well, quite a few of the companies that Pivotal Ventures has invested in are familiar to our viewers and listeners. Ellevest and Little Otter, to name just a couple. Those founders and CEOs have been on our air. Other investments include Hugh, Founders First Capital Partners, Millie, Mon Ami, Summer Health, and more. Pivotal Ventures was founded nearly a decade ago by Melinda French Gates, and it seeks to, in its own words, quote, accelerate social progress through high-impact investments, philanthropy, partnerships, and advocacy. The company's also invested in nearly 24 funds. We've got with us Erin Harkless-Moore, Senior Director of Investments at Pivotal Ventures. She joins us from Washington, D.C. Erin, when you're looking out over the investment landscape, what are the boxes that the companies or the funds you want to invest in or you are looking to invest in, what are the boxes they have to check?
Tim, Carol, thanks for having me on today. It's great to be with you. We're excited about this market opportunity that we see in investing in innovators that are building the next generation of companies that are tackling some of the biggest challenges facing our society in caregiving and women's health and mental health. So we want to see founders that have lived experience in building in the areas that they're targeting and that are taking advantage of huge market opportunities. Our strategy at Pivotal is to invest in both funds and directly into startups that are, again, innovating in what they're doing. And so we're looking for founders that are going to bring game-changing technologies to the table and also backing the investors that are going to capitalize them as well.
Erin, we love size and scope here at Bloomberg. Give me an idea of how much stuff gets pitched to you, how much comes across your desk, whether it's a startup or a fund that says, help. We're doing something good, but we need either some funding or some assistance to even, increase our impact.
Sure. Our pipeline is very robust, and I think it's a hallmark of our strategy that we try to do a couple of things differently. One, we're accessible. We don't need a warm intro. So if founders can find us, on LinkedIn, at conferences, at events, we're happy to take those meetings and get to know them and what they're trying to build. We also want to invest early when we can. Typically for fund managers on that side of the table, we'll focus a lot on emerging managers, those that are often first-time funds. And I actually like to think of them in a different frame as next-generation managers that are finding new patterns and new types of founders and innovations that they can back. So our pipeline is robust, and we're excited to be deploying capital in this market environment.
Well, how would you describe the market environment right now? Because so much of what we talk about is about investment in AI. I mean, there's even a headline from our Bloomberg News team today. Anthropic finalizes $3.5 billion funding round at a $61.5 billion valuation. Do you feel like you're missing out at all because of a lack of AI investments right now?
Not at all. We are investing in AI. Our fund managers are. You mentioned Little Otter as well at the top of the introduction. One of our newer investments. They raised a little over $9 million to continue to bring AI into their behavioral health and mental health platform to support children and families and caregivers. And so, AI is present in our strategy and the funds and the companies that we're investing in. And we think AI is essential to modernize our healthcare system, our caregiving infrastructure, foundational industries like manufacturing and supply chain, wealth tech. It's showing up across our fund portfolio and directly in some of the companies we're backing. So it's important and something that we're spending a lot of time in at Pivotal Ventures.
Yeah, I should note Rebecca Egger, the co-founder and CEO of Little Otter, was on our program. That was back on Valentine's Day, Carol, so just a little over a week ago.
It was a great conversation. Yeah, it was a really rewarding conversation. I feel like eye-opening for all of us. I am curious too about the caregiving component that you guys are investing in. I feel like that comes up more and more in terms of, if it's a book on like how to lead, how to manage, how to move ahead, you got to think about the caregiving component in your personal life, but also of society at large. Talk to us about how you approach caregiving and what you see as the biggest kind of struggles that we need to really invest in and overcome.
Sure. I want to pause. Friday was National Caregivers Day. So just to give a shout out to all the caregivers, we're all caregivers at some point in our lives. Whether you're caring for young people, the aging, your own family members, your spouse, a friend, a neighbor. We've supported some research at Pivotal Ventures that sized the care economy as a $648 billion market. That's huge. It's actually bigger than the pharmaceutical industry. And we need that modern caregiving system to support women and families and all of us to be able to, do our work and be productive and active, contributors to society. So, we think that those investments in those systems, whether it be from childcare all the way through to tools to optimize the home and caregiving in the home, to the elder care space and in the aging side of the spectrum, all are huge opportunities. We have funds and companies in our portfolio that we're tracking that are innovating in those spaces. And we think it's a big market, and others should be paying attention and deploying capital there as well.
Where do the funds of funds come in here versus the direct investments? Like, how do you think of when to make an investment in a company versus when to deploy capital to a fund of funds?
Yeah, both are pillars of our strategy. Our portfolio of fund investments is essential to changing the face of our investment ecosystem and the venture capital sector in particular. There's been some data, PitchBook has put out and others, about 17% of decision makers at U.S. venture capital firms right now are women. That number has almost doubled in the last decade, but we still have a long way to go. And so as part of our strategy, we think it's incredibly important to back these women investors who are deploying capital and finding great founders in every sector, whether that be supply chain and manufacturing, as I mentioned, and the tech that's innovating there, to digital health, to the consumer space. We want to find women leaders and investors of all stripes that are deploying capital across those sectors. And our direct investing strategy is complements that. It's not really an either or. I think it's a both and we see opportunities again in this care economy thesis, women's health as well, maternal health, menopause, and care around those themes is a huge opportunity. So, with our direct investing, we try to flex and focus on areas that are aligned, back to our broader mission at Pivotal to get more power to more people, especially women.
I did mention the Pivotal Ventures was founded close to a decade ago by Melinda French Gates. Just clear something up for us. Is there other money in there right now, or is this all money from Melinda French Gates? Do you have other LPs?
It's all capital solely from Melinda. She started Pivotal about a decade ago in 2015, really with a mission to advance social progress and advance women's power and influence, get more power, as I said before, to more people. And one thing that was innovative when Melinda set this up was this idea that you need multiple tools to advance this objective and to see, our mission. And that includes philanthropy. That also includes the investing and the investment capital that we're deploying.
Do you think that gives you more leeway in terms of timing? There's not as much pressure for returns over a certain period of time. Do you think it changes your investment strategy because there is this patient capital?
Our strategy is long-term, as you note, and I do agree that having that ability to see the full picture and deploy multiple tools in our toolkit as a platform is huge to driving our mission and the type of change that we want to see in the world. But let me be clear, this is a strategy that is centered on achieving best-in-class financial returns by investing in these funds and some of the themes that we've discussed, like care economy and women's health and AI. We think there's a great potential to deliver, best-in-class market rate returns, again, over the long term, but we do have that patience with our founder alongside us to do just that.
Erin, do you feel like the establishment, the financial establishment, especially when it comes to women founders and funders, are still kind of forgotten and overlooked?
It's easy to stick with the patterns that one knows. I've been investing in funds and for close to 2 decades now, and I think that it's no one gets fired for sort of following the same playbook. What excites me about what we're doing at Pivotal Ventures is we're recasting a different playbook that I think will show other investors and other stakeholders in the financial ecosystem and the investment industry that there's real value to be had by bringing different perspectives to the table, looking at opportunities like this care economy that are huge, again, $648 billion market. That's the type of paradigm shifting we want to see, and it comes back to having that patience and time horizon to play it out and being long-term focused.
What is your time horizon for an investment?
It's a typical, I'd say, early stage investor timeline. We're deploying capital year over year, and on our funds, they're typical venture early stage funds that will be investing over a 3 to 4 year time period and then harvesting the gains beyond that. So it's a long time horizon. I'd say decade plus that we're really looking to drive the results that we want to see both in our funds and with our companies. If they return capital sooner, that's great, but not at the sacrifice for building, I think, an enduring platform as a fund manager or a business as a founder.
All right, we have to leave it there. Erin, so glad we could get some time with you once again. Erin Harkless, she's Senior Director of Investments for Pivotal Ventures, joining us on this Monday from Washington, D.C. Erin, be well. All right, folks, you are listening and watching Bloomberg Business Week. We are not quite done.
We're not quite done. DEI, it's kind of like a 4-letter word for these days, Carol. We're going to talk to the Vice Chair of the DEI Committee at the University of Arizona for how she's navigating the waters these days. That committee, for now, still exists.
Just being careful with that.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. We had an update for the Dow Jones Industrial Average today, but for the S&P, late day selling ended lower by 29 points, down 0.5%. Dow Industrials up 33, a gain of just under 0.1%, while NASDAQ today was down 237, a decline of 1.2%. The 10-year 4.39%, the 2-year 4.16%. Spot gold up $16 the ounce, higher by about 0.5%, while West Texas Intermediate crude oil today up 0.7%, 70.87 for a barrel of WTI. So stocks ended the session mixed. What about the valuation backdrop for the U.S. equity market? Eric Metz is Chief Investment Officer at Spider Rock Advisors, and he was a guest here on Bloomberg Business Week.
So if you're trying to think about building portfolios, the timing, the macro levels, market timing, et cetera, are very, very challenging. Expensive can get more expensive, valuations can get further extended. I think objectively speaking, on almost every metric, they're, on near historic all-time highs.
Eric Metz of Spider Rock Advisors, interviewed right here on Bloomberg Business Week. Hims and Hers health shares are plunging after hours after saying it will pull commercial doses of the copycat weight loss drug Ozempic. After hours, Hims and Hers down by 17%. And Zoom Communications, as it's now known, projected worse than expected revenue growth for the year, dimming optimism that an expanded suite of products will bring a sales surge. Again, recapping, stocks lower today with the S&P down 30, down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, PepsiCo among the latest companies to dial back its DEI programs as President Trump's push to purge DEI ripples throughout corporate America. Companies from Amazon to Walmart have announced changes to their DEI programs in recent months as activists ramped up pressure against diversity initiatives. The trend accelerated under Trump, whose administration threatened to pursue criminal investigations against companies with, quote, illegal DEI. Somebody who's been watching this really closely is Katina Sawyer. She's vice chair of the DEI committee at the University of Arizona. She's also the author of Leading for Wellness, How to Create a Team Culture Where Everyone Thrives. She joins us this afternoon from Tucson. Katina, good to have you with us. I got to say, I think a lot of people would be surprised that the DEI committee at the University of Arizona still exists. I mean, this is a university that gets federal funding. Is there concern there that it has to shut down?
Well, I think that a lot of institutions, especially those that receive federal funding, are carefully reviewing their strategy in this space, and that's certainly true here too. While we don't have any definitive answers at this point in time, we do know that these EOs have really reverberated through both academic institutions and other institutions that are federally funded in ways that I think create some anxiety for people who care deeply about these issues, and are certainly impacting our day-to-day in terms of waiting for guidance on how to move forward effectively.
Are you concerned that the university will be breaking the law at any point?
I mean, I think that legal risk is always a concern, and I think part of the challenge of grappling with executive orders is that it's unclear exactly what the parameters of compliance look like, right? And so, currently there are judges who are fighting back to block some of these EOs, and really, it's unclear the extent to which those will be successful. I think the ambiguity in terms of the implications and the also, what compliance actually looks like and how to execute on these EOs remains somewhat in question from similar institutions.
Katina, how much debate have you guys had internally about this issue, about what to do about it? Obviously, you've chosen to keep it for the moment, and also whether you've had discussions about, all right, even if we hold on to it, let's be quiet about it.
I think there are,
although you are going on public, national, global radio and YouTube, so you are not being completely mum. So go ahead.
Well, what I would say is that I think that, there are lots of conversations going on in this space, in the education space more broadly. I am hearing a lot of faculty across universities trying to understand how this has implications for their teaching, their research. as well as for, policies within the institution. I'm also hearing not just in federally funded organizations, but through our work at Worker Being, we're hearing a lot of companies trying to grapple with what is necessary, how can we continue to maintain our commitment to the well-being and health and happiness of all of our employees, and still, make sure that we're not creating legal risk for our employees or for our organizations. And so I think that these kinds of conversations are certainly commonplace in organizations. And part of it is just, even organizations that want to maintain their commitments to DEI are also grappling with these ideas around, how do we do that, but remain within the realm of what is legally possible.
Do you think that the companies that are pulling back on DEI, I mentioned Amazon and Walmart, PepsiCo, I mean, the list is at this point just dozens of companies. Deere is one of them. Do you think they're making a mistake?
Yeah, so I think that anytime a company makes a promise or a commitment to a value and backtracks, what the research would show is that employees are going to more broadly be upset by that. Justice and equity perceptions, as well as perceptions that the company is actually telling the truth when it tells you what it values or puts value statements out there, are things that employees don't take lightly. People identify with their organizations. They see themselves as an extension of the organization, and these values are important. When companies start to flip-flop on their values or pull back on things that they had previously committed to, it starts to put questions in minds of employees, even those who may not have a particular stake in the DEI space, about, well, what's next? What other value might they roll back on? It creates some concern about consistency of ethics in the organization, as well as consistency and morality. And that actually is more widespread than just DEI and just maybe concerns that minority or underrepresented employees might have. Those perceptions actually start to taint the views of employees more broadly.
Do you think it's wise for CEOs to court President Trump and meet with him and appear to be or say they are willing to kind of play by the rules that are being set by these executive orders, and then kind of still go do their own thing? Do you feel like that's kind of what going on? Okay, I'm going to say something, but I understand what's important to my employee base, or what's been important to our company culture perhaps for the last few years, and really don't want to change anything. But I think, is it wise for companies, especially if they're publicly held entities, to in some ways court the White House?
I think it's wise for companies to make educated decisions about how they move forward. Some of that may be gaining information from higher level sources, right, about what is expected and how they might move forward with the path of least resistance, right, and what actually is that resistance, and what are real threats versus what, is an imagined threat that might not come true. So I think information gathering and also, banking some goodwill is generally a good strategy. However, I also think that, companies need to understand what they stand for in the long term. If you start to be seen as a company that's just a weather vane, right, along with the whims of a particular party, of any party, right, that you can start to create in your mind some doubts of the stakeholders that keep you in business, like employees and customers, of what you actually stand for and what the value is that you believe you bring in differentiation to competitors. So I think it's a tricky balance, right, of trying to really understand, well, what is the reality that we're living in, and how do I navigate that reality using that information as best as possible, and also making sure that you're staying consistent and true to who you are as a company and what people have come to expect you to be.
Just 30 seconds. Can the free market solve this if companies aren't going to come out and say this? If indeed, the policies that companies put in place for DEI, it's good for business. Just 30 seconds. Can this be solved by the private market?
I mean, there's a lot of data to show that consumers give their dollars to, and employees stick around longer in companies that they feel align with their values. And so if you have a customer base who liked what you were doing before from a DEI perspective, the likelihood that you may, and we're seeing some people voting with their feet now, experience some reverberations from that in a negative direction if you change directions on this, I think that's a real threat. And perhaps the free market will decide who they want to give their dollars to.
All right, we're going to leave it there. Katina, thank you so much. Katina Sawyer, Vice Chair of the DEI Committee at University of Arizona, also author of Leading for Wellness, How to Create a Team Culture Where Everyone Thrives. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, just about 7 minutes to go before we wrap up the Monday edition of Bloomberg Business Week. Carol Masser, Tim Stenovec, live here in our Bloomberg Interactive Broker Studio. An interesting day. It's just funny, you and I were just reading through some of the most read stories on the Bloomberg, but also kind of our read on the market. S&P 500 swoons in the last 15 minutes of U.S. trading, with the S&P 500 breaking below 6,000. The NASDAQ 100 lost over 1%. Investors awaiting NVIDIA's earnings, which could impact the market.
Hey,
we did see selling, definitely, into the last few minutes.
Hims and Hers Health, Carol, down 17% right now.
Getting beaten up, man.
Yeah, the company reported fourth quarter results that Lear Inc. described as below what investors expected, even as profit and revenue came in above the average analyst estimate. One headline here, the company says that it's going to pull commercial doses of copycat Ozempic. Remember, we were joined by Madison Muller on Friday, and that was the day that we heard from the FDA that there was no longer a shortage of these drugs, Novo Nordisk's drugs. So therefore, the compounding pharmacies, the ones that are able to use this loophole to create drugs that are in shortage, that's going to be closed.
Right.
And we saw shares of Hims fall as a result.
Yeah, right. We saw it really getting, kind of beaten up, and we have been kind of reporting that out. But yeah, so it's going to pull the commercial doses of copycat Ozempic. So that cannot be good for the business. Although Madison Muller, who reports on this company, reminded us that this isn't the only drugs that this company does.
Yeah, that's true. They actually announced on Friday they were buying a peptide facility.
Right.
I'm not a doctor, so don't ask me.
No, but if
what to do with those.
Peptides in a lot of different kind of medications, but you also see it in a lot of skincare products and so on and so forth. So
they do, I think, like hair growth stuff. They do ED stuff, she said. So yeah, they do a lot of different stuff.
Hims' ability to sell the copycat weight loss drugs is uncertain due to U.S. regulators ending a shortage of brand name drugs, which created that loophole for them to be able to create those, compounding of other drugs, right, that were copycat drugs. The company does see a path forward through, quote, personalization, and has purchased, as you said, that new manufacturing facility. So that personalization idea is also something that Madison talked about, that you might have a drug, right, and you throw something additional in it specifically for a patient. And so maybe that is also an area of revenue growth going forward.
Do you want to talk a little bit about congestion pricing? We were supposed to talk about it a little earlier.
We were supposed to.
Okay, this new toll on motorists driving into Manhattan's busiest areas raised $48.6 million in its first month. This as President Trump is seeking to end the congestion pricing program just weeks after it began. The MTA began charging drivers back on January 5th. The amount of toll revenue collected between that start date and January 31st is in line with budgeted projections. This is according to Jai Patel, the CFO of the MTA, who said this in an interview. The MTA anticipates the fee will bring in nearly $500 million a year, or about $40 million per month. There it is, $500 million a year, $500 million a year.
That's what I said, $500 million. I was trying to do some fast math when I heard the number this morning, and I'm like, okay, so is this a lot of money? So $500 million, that could fix a few things in the subway system. But we also have another story on the Bloomberg that says that we now have another legal showdown, right, as part of this. So we have the MTA suing the Trump administration over its decision to revoke the federal approval of New York City's congestion pricing program. The MTA arguing that the program is lawful, and then the Trump administration's move is arbitrary and capricious, while the administration claims the program is a, quote, massive business killer and tax on New Yorkers.
The agreement struck under former President Joe Biden is rooted in a federal law that lets transportation agencies charge tolls to help cut traffic on busy routes. Legal experts expect an intense court fight, and several said New York is likely to win. The state is clearly not going to back down, this according to David A. Super, a professor at Georgetown Law. There's no legal reason why they should.
Yeah.
What if they reach a deal?
We'll see what happens.
Governor Hochul met with Trump on Friday.
Right.
I heard she mentioned yesterday on one of the Sunday shows that they did not reach a deal.
Right. She said on Face the Nation on CBS, I wanted to take my case to him directly, let him see the benefits of this program because our city is paralyzed with gridlock. We had a path forward to be able to make the city move again, and it's working. I wanted to just have that opportunity to convey that. Yeah. Hochul suggested that the president wasn't sympathetic when she discussed congestion pricing with him in a meeting Friday at the White House. So we shall see. Nothing like congestion pricing gets people worked up. Either people, I think there's no middle ground. I think for most people, they either love it or they don't.
We should note that through February 17th, there were 2.6 million fewer vehicles in the congestion zone, a 10% decrease, causing traffic to move faster along Manhattan streets. This is according to the MTA. We have to see also economic data, too. Because I want to know how businesses are affected.
They talked about that
in the area,
right? Governor Hochul.
She did, yeah, Governor Hochul did.
Yeah.
But there's got to be more research out there. She did talk about restaurant reservations being higher.
Yeah. Well, you're talking about, people walking around, right? And walking in areas where they might not have otherwise. Paid ridership on the MTA's subways and commuter rail lines increased in January, with the agency collecting $11 million more than budgeted in fare box revenues last month. That's according, again, to MTA data. So the more data that comes in, you get a better feel of what exactly is changing, what's being impacted, what's happening. What's happening in your world now that we've got, 40 seconds to go?
I'll probably take a MTA-funded subway home.
You and me
all
both.
The way home.
You and me both. It was pretty empty this morning. I was kind of surprised.
Yeah, it was.